Well, good afternoon and welcome back to the YouTube channel of Old Bloke Crypto. On June 17th, 2024, it's been several weeks since I've made a video. Reason being, there's really not much more to say than after I made the last video. So if I don't have anything to say, I'm not going to bore you and bother you. Not a shiller or a grifter or anything like that. Who wants your money? Just going to share with you my trades and where they're at. So while you're at it, while I think of it, please hit the like and subscribe buttons and the notification bell to be notified of future videos. And as you'll see here on the splash screen for the start of the video, a double dip. We've all heard of what that is. Well, in the crypto, it can be a pretty useful way of making money if you know what to do. And so I've just featured here the last trade that I closed out, opening at 36.73 and closing at 38.45 for a very nice profit. Thank you very much. So that was the first of the two trades that I'm referring to today, and I'm back in a trade, and I'll discuss that with you in just a moment. So this particular trade, I had 8.75 ETH involved, and when I closed out for a profit after the exchange fees, etc., of about $1,400 US. So a very nice little earner, but there is more to come. And the second one is going to be even more profitable, and I'll show you how. And really, at the end of the day, it comes down to taking advantage of range trading. And I'll just go over this here. This is Ethereum on the daily chart. And you'll see here that right now, as of today, we had a bit of a jump this morning, Australian time, coming into the weekly daily open close, and got up to around the 36.50, I believe, and has just come back down since that time. So this is the red candle subsequently for today. But you'll see here, and I've marked these range out for a long period of time. You've got the mid-range here at 35.45, the yearly high range 41.02, and the range low, this is high time frame, at 27.91. And in the middle of that, we had a low time frame range. It bounded at 36.24 and 39.80, as you can see marked out here. Now, you can see that price has been in that range for quite some time, in the middle of that low time frame range, then dipped right down and came down right below the mid-range, which could have been a breakdown down towards the 200 EMA on the purple line, or, as it appears to be the case, a deviation below the low time frame range low and the mid-range more precisely, which is a more powerful resistance support level, because it goes back, the higher the time frame, the more important the support resistance level, goes back quite some way, and has come back and is now above that 35.45, which is an important level. So now let's get back to this double dipping. So I closed out the last trade at 38.45, which is up around this level here. I haven't got it marked out precisely on this chart, but anyway, 38.45, as I showed you in the splash screen at the start of this video. So what I've done after that is that every $50, I added 1.25 ETH. Every $50 change, I put in a placeholder of 2.5 ETH. And as prices come down, or as oscillated and then come down, I have then added that 1.25 ETH every time we've come down by $50. So I have been, in that sense, DCAing on the downtrend. And it's something important to mention at this point, just to remind you that nothing I say is financial advice. This is how I trade. You trade what works for you. But for me, I'm happy to continue adding all the way down. And if we get down to the 200 EMA or the range low, I'm going to keep adding to that position. Now, and so currently I've got about 12.5 ETH currently committed into this trade. And so adding, but I'm doing it manually. I'm not doing it in an automated fashion, placing orders at particular levels, because personally, and this is my preference, I prefer to trade manually. You might prefer to trade in an automated fashion. The only automated trades I take are my exits, my take profit exits, but I prefer to place or open a position or add to a position manually. That's me, and it works for me. So anyway, my double dipping is I've been adding, DCAing as the prices come down, and then each of those $50 levels, I haven't been adding as the price is coming back past there. I have just left those positions. So for example, I've taken, say for example, 3,800, I've added 1.25 ETH at 37.50 and so forth. So for example, I've added that at 3,500 as well when price was going down, When price has come back up past that, I haven't added at that price point again. I've just left it. So I've basically ticked that price point, left it alone. So as I said, I've got about 12.5 ETH committed to this trade at the moment. Now remember, in range trading, or as I also call it, ping pong trading, that the price is oscillating in this range, and at the moment it's back in to the above the mid range, like I said. But I won't be surprised if it comes back into this low time frame range again, and heads towards the top of this low time frame range. And I'll explain why in a minute. But regardless of that, if it happens this week or next week, price likes to remain in a range 80% of the time, as you've heard me say. So it's inevitable that it's going to come back up, especially in the bull phase that we're in right now, going right through next year, at least another 12 months, is that we're going to come back to these top of these ranges, whether it's the low time frame range and or the high time frame range. So what I'm doing is taking advantage of that oscillation, knowing that it's going to happen, and I'm prepared to look at my trading position and say, oh, it's in the red as I continue to DCA for a period of time, knowing that it's going to come back up towards the upside. Now, I could say to myself, I'm going to wait until it gets to a certain level, until it goes down to a certain level, and then I'm going to open a position or add to a position. You can certainly do that. But for me, with range trading, you can find here, for example, this is a classic example, apart from these wicks, which I don't trade, is you'll see it's going sideways, sideways, sideways. Now, it could come down or it could go up, but I've got a position open and I'm taking advantage if it just decides to go up to the top of the range and close it out. So basically, you're playing the odds, but prepared to be in a negative position for a period of time. If you're trading like I do, and I prefer to just capture that value all the way down to a certain point, if the price goes that way, or if it just simply comes back up, say thank you, thank you, thank you, thank you, and close it out. So basically covering my bets in either direction. But again, that's how I trade. So now going to the liquidity charts now, and as I always say, show me the money. But just as I get into that, and I'll just remind you that the people in the know who are commenting on the ETF, when they actually start trading, the consensus is around the 2nd of July. Now, that is going to drive price for the next couple of weeks because of speculation, narrative, if you like, which is growing. And it's one of those things in Ethereum that the market works on those two things, speculation and narrative. Speculation ending in sell the news events. And so what's going to happen for me is that I'm looking for price to continue to increase around that July 2nd time frame. Now, there might be my exit triggers, which I use, may have gone off by then. I may have closed out a trade. I may have closed out a couple of trades. Who knows? But I'm looking for a real peak in the market, a short-term peak, low time frame peak, I should say, around the 2nd of July when the first of those ETFs actually start trading. But in the meantime, let's get back to it with the liquidity, and you'll see here, and this is a facet of the market which in the bull phase just increases, is the amount of liquidity on both sides of the price action. So you'll see this morning we had that, Australian time, we had that big price spike up to about 36.50, I believe. And then, so you saw billions of dollars worth of liquidity is taken out in the space of a few minutes, which is great. But look at the billions more that are sitting to the upside, just a huge amount. This is the weekly time frame, and just on Binance alone, and just a huge amount. And just in a very short price band, a small price band of a couple of $100. And so there's just many, many billions. And then also, not as many, but still plenty of billions to the downside. And so what it does, of course, is it induces volatile swings, greater volatile swings, as the market maker comes in and goes chomp, chomp, chomp on the over-leveraged, unwise, undercapitalized retail traders who are placing literally bets, not trades. The price will go a particular way. So you'll see here, it's exciting for people who've been around for a period of time who can take advantage of that, like I've shown you how to do the double dip trade, because it produces that volatility. Volatility is up and down within a range, like I say, the ping pong trade. So the more this sort of liquidity comes in, the greater the advantage for the range trades that I'm talking about. So should you be opening a position now if you don't already have one, or should you be adding to one if you are, if you have a position open? Well, again, it's up to you. But for me, if I wasn't already covered by my DCAing those $50 price points all the way through this current price action, then I would certainly be opening and or adding to this position, because you look at these funding rates, it's 6.5%, that's nothing. It's still very low. So it's a bit of a contrast to the amount of liquidity that's coming in there. The market is still relatively muted for this time of the cycle. And there's a lot of shorts, as you can see, a lot of basically balancing out shorts versus longs. And so it's not skewed to either side. So it's not skewed to lots and lots of longs, which would blow out this funding rate. So really, again, another indicator here, same with Sol, really that you can comfortably trade within this range, knowing that the market is likely to stay in this range for the next few weeks at least, and you can take advantage of it like I'm doing. So anyway, wrapping it up, do follow me on Twitter if you're not already, because I post a lot more on Twitter than I do on YouTube. I post on YouTube when I've got something important to say, post on Twitter when I've got less important things, but still interesting things to say. But so as I said, I haven't posted on YouTube for a few weeks because there's been nothing really to say with this sideways price action. I've just been DCAing as the price has oscillated in a small range. Generally declined. Yes, it has declined, absolutely, but within the range that I'm working on. And so just to reiterate, as I was saying, I'm operating within this range here. I'm expecting the next move. Now, we've taken a lot of these lows. I'm expecting in the second half of this week, price to come up towards the top of this low time frame range based on the speculation of the ETFs and the fact that we're in a bull phase and the fact that we have taken out these recent lows, all of the above. I'm DCA'd in, and if my exit triggers trigger as we get up closer or to the top of the low time frame range, or in fact to the yearly high, less likely right now, but more likely in a few weeks' time, I will be closing out those trade and saying about my double dip in this range, thank you very much. So, as I say here and in the space screen, the double dip is the go at the moment. Let me know in the comments or on Twitter if you're deciding to double dip along with me, and if so, when you close your trade out, which will hopefully be in a nice stonking big profit, which is what I am aiming for myself. This is Old Bloke Crypto. I'll talk to you again soon. Thank you.